So, hello traders. It's kind of weird to say because this is my first kind of video ever really doing this. I've uploaded stuff in the past, kind of privately, send it to some people that I'm teaching some stuff to, kind of opening the eyes of other people. And some people are kind of just interested and want to know what this thing's all about. So, this isn't catered towards anyone with more than a few months of time ever spending looking at anything trading related. So, this is kind of like a little introduction. So I'm not going to exactly get into strategy or kind of what I look for and all that kind of stuff. It's basically just going to be a breakdown, essentially, of what is trading, what can you expect, what are the realities of kind of what goes on behind people that trade. I'm not saying I'm any financial advisor. I'm also exactly not scaled up to the point I want to be, but I think I've done this for a little bit of time. I can at least give some pointers to people that are newer or kind of intermediate. I've been doing this for, I want to say, a little over 3 years seriously, but 5 or 6 years entirely, like trying to get this training thing under my belt. Recently found my most success in the last 6 months, I would say. Most success. I got the cool flashy shit that all the traders post on Instagram, but that's not why I'm here. It's nothing to do with any of it. Anyways, yeah. Not exactly where I want to be yet, but I think I have a little bit of stuff under my belt. At least I could talk a tad bit about. So, what you're looking at on my screen is called Forex. It's a foreign exchange. There's basically $5 to $7 trillion that go through this every single day. And what we're looking at right now is Euro USD. The easiest way you can think about this is Euro is the first pair on the left, EUR. USD is the second pair, obviously. And so when we look at this, we are comparing the euro dollar versus the US dollar. The easiest way to think about this that I think of it is when you're going to buy this currency, you are buying the euro. When you are going to sell the currency, aka short, you're essentially buying the inverse. And so yeah, that's Euro USD. There are tons of different markets you can trade. You can trade commodities like oil and stuff like that. You can trade indices like NQ, basically like NASDAQ, ES, basically all this stuff. All these different charts. You can trade soy, you can trade, pretty sure you can even trade cattle. Pepperstone, a little bit of cattle, yeah, you can trade cattle. There's basically unlimited things you can trade. This is not really into stocks or options. I more used to focus on Forex for kind of swing trades, and then I also focus on futures for like intraday, meaning trades I take on a daily basis versus trades that I will hold kind of long term to meet certain targets and stuff like that. I want to get in really quickly to like what risk to reward is and kind of the thought process behind edge and how that works with the market and everything like that. So fundamentally, you can buy something, you can sell something. There are orders called stop losses. Essentially what that is you enter a trade. Let's say you want to place a buy here. A stop loss is essentially, let's market the buy. We're just going to place it on this candle. My red line is the buy. Essentially a stop loss is like, let's say I enter here and then it messes around like up here and the candles move and then it eventually goes down to this bottom line that I labeled stop loss. Essentially what that means is it will take me out of the trade. With certain parameters with your trading strategy, you have invalidation points. What that essentially means is invalidation points is where you should place a stop loss. A stop loss will get you out of the trade so you don't stick in the trade and have it keep dwindling off and you lose extra money. That's a very niche way of putting it. A lot of beginner traders will take $1,000 and they'll just chuck it into one trade and lose everything, or they'll double it and eventually lose everything. So risk management is basically the name of the game. So like, let's say we're going to take this little thing. This is how I'm going to explain like risk management. So if you look in the middle of this, the green, we're going to, the green is the buy section and the sell is the gray section. Essentially, if I were to place this, theoretically, this is simply just a template, like an outline of, like, to show an example. If I were to place my trade like this, my entry would be at this middle gray line. And then if I were to move this up, this would adjust the risk to reward ratio. long term, when you're trading, you will be able to kind of back test and collect data on your trading strategy and essentially come up with the best R multiple, which I'll break that down in a second. The best R multiple and places to place stop losses and stuff like that. Essentially what you're saying is, I'm going to place a trade like a 1-to-1 risk to reward right here. If it were to go down to the bottom of this gray area, I would lose whatever I risked. Let's give an example of like $100. So I'm going to risk $100. I enter right here, 100 bucks. If the market goes down and hits this bottom line right here, I'm going to lose 100 bucks. And if it goes up to the top portion right up here for a buy, then I'm going to win 100 bucks. Essentially, you're acting sort of like the casino. So the casino operates, I don't know exactly, but they operate with a pretty small edge in like blackjack. I believe it's like maybe a 2% or 3% depending on the rules of the table, but essentially they're going to win 52% of the time. And so like you bet on blackjack, you put $100 down and you lose that, they're going to essentially win that 1-to-1 52% of the time, or 53, 40, 48 or something like that is your win rate on average. And that's if you're playing perfect blackjack. That's not talking about like counting cards and stuff like that where you can get an edge. But essentially what you're doing is you're placing money based off of a data set or strategy that you have that wins more than it loses with a positive or neutral R multiple. Meaning, if I know from my back testing of thousands or hundreds or whatever of trades that on average when I risk $100, I'm going to win 60% of the time, let's say. We obviously don't know the outcome. It's not going to always be like a heads, tails, heads, tails, heads, tails thing. Like when you flip a coin, you know it's going to be a 50-50 on whatever you get. But the sequence at which that represents doesn't always come out to heads, tails, heads, tails. You can run I'm sure you've had times where you flip a coin and it's heads 5 times in a row or tails 4 times in a row. You don't know the sequence, but ultimately, if you were to keep flipping that coin for a allotted amount of time, you are going to land at that 50% mark. And so if I take enough data sets around the same sort of trade and I continue to take that trade, I can develop something called an edge as long as the data backs it. Meaning every single time that I take this 1-to-1 trade, I have an edge saying that based on whatever points that I want to take a trade on, or whatever my strategy says, when I take this trade right here, that my strategy says 60% of the time I'm going to net a plus $100, and then 40% of the time when it hits down here, I'm going to lose $100. And so at face value, if you're an investor, that's a pretty good bang for your buck. Obviously, it comes down to the how often the trade presents itself. Like some people have this trade that you could take once or twice a day. Some people don't have this trade too often and it shows up once a week. So ultimately, it's you come up with a set of rules, good risk management, meaning good stop loss placement, and ultimately you have to collect data to come up with an edge that shows that you can make profit in the long run. We're not talking here days, we're not talking weeks, we're not even talking here months. A good representation is looking at it quarterly, because some people do have negative months, but overall, most profitable traders, I would say, can end the month green in profit. I've already done all my due diligence finding my trading strategy, and I've sat behind the market for hours and hours, essentially kind of coming up with my own trading strategy and building up my experience. That's something that you cannot really financially buy. You can't pay a mentor or whatever to come up with a strategy that he just gives you and you can trade outright. There are going to be certain conditions that the market presents where your trading strategy might not perform as optimally as your back testing says. And then there's also markets that it performs way better than you ever expected. A great example of this is if you're a really high volume trader, you trade breakouts on high volume or news or something like that, like the August months. The summer months are kind of known to be slowed down, not a ton of volume, and so your P&L might suffer a little bit, or your trade frequency might suffer. Anyways, essentially, the way I look at this, to kind of break it down, is I think and I believe, based on my data, that trends move in or markets move in trends. And so very simply, I'm going to delete all my drawings here and just kind of zoom out. You'll see that the market will push down, it'll come back up, push down, come back up, and it kind of moves in this wave-like formation. It doesn't always perform perfectly, because ultimately, if it was perfectly, everyone would be a millionaire. Like, everyone would make money. And I think the stats are something like 87% of all the regulated Forex brokers, which is the foreign exchange brokers, said that 87% of people lost money, or it was like 85%. So it's not as bad as it used to be, saying that 95% of traders lose money, but 87% of people lose money. And I have my own opinion that I can kind of delve into in the future about all that. But yeah, we can see that markets kind of move, push up, come back, push up, come back, push down, up. And they kind of move in this trend-like kind of wave formation. If we toss this on, oops, let's just write, oh, the line chart, perfect. You can kind of see, like, it's a repeatable pattern that kind of happens. So if you could come up with a strategy that basically optimizes this knowledge right here, and you kind of come up with a strategy of entering and exiting, then ultimately you can make money from the markets. So a really quick example of that would be, obviously this is hindsight, so I can tell the future, but I'm going to come up with something super basic. So let's find a really good example. Let's look at this right here. You can see that this right here is a high. I'll call it a high just for this, and then this is a low. If we could come up with some sort of trading strategy that basically says that on the pullback, or the move back in, this is what we're looking at. So on the pullback of this move back in from this low to like roughly 50% of this, how could we take a trade? So we're gonna replay this really quick here, and let's just look at what we have. So I'm gonna look at this right here, it's high, and I'm gonna look at this low, and then I'm gonna take this little tool and I'm gonna split this in half, 50%. So if we're gonna take a sell, meaning we're gonna basically buy the US dollar against the euro, we place our entry at 50%, and then our target at 1-to-1. And let's say if it goes down into this middle part, our trade is gonna basically be activated. I'm gonna place $100 risk right here, and then see what happens. Okay, so the candle pushed in, and now we're gonna sit in this trade, and sure enough, it pushes lower. So if we were to actually have taken this trade live, this would have netted us $100, or whatever you risked, because it's a 1-to-1 risk to reward. There are traders that will take 1-to-2s, where every $100 that they risk, they'll make $200 if it does hit profit. And in this example, you actually would have hit that, so you would have made $200. It's not up to me to decide kind of what strategy you trade. I'm not here to kind of flaunt my strategy, say buy my course and all the stuff the guys on Instagram say. But just kind of break this down for people, and ultimately kind of just record my journey as I do this. I just kind of wanted to give a little context to people that maybe don't understand what I'm doing, if this ever catches any traction, and to also people that like friends and stuff like that, because I frequently get asked kind of what I do, what is trading, what is Forex, what is stocks, all this stuff. Anyways, this is the nitty gritty of it. I'll probably end up uploading another video, just kind of going a little bit further into this, because this is only going to be like a part 1. Kind of just write some bullet points down to kind of go over topics and questions that at least my buddy had. Anyways, thank you for watching. This is kind of a very early, I guess, example of what trading is. I definitely skipped over a lot of basic stuff, which is why I'm going to kind of write down and take a more formed approach about all this, a more professional approach, instead of just kind of winging it behind the charts. But anyways, yep, let me know. Hope this was good. Thank you.